Hey everyone, welcome back to Corporate Decoder. Today we're diving into a 20-year filing, which, if you're not familiar, is basically an annual report for foreign companies listed on US stock exchanges. Now, don't worry, it might sound boring, but it's actually super interesting if you want to know how these companies are really doing behind the scenes, far away from marketing and PR spin. Get ready to see how this steel giant Ternium is actually making or losing money and whether you should consider investing or not. This Form 20F is for the fiscal year ended December 31, 2024. So we're getting a look at their most recent annual performance. Ternium is a major steel producer in the Americas. Before we get started, remember that this filing includes forward-looking statements, meaning there are predictions about the future, but things can change. A whole bunch of things can affect future performance. And this list goes on, including steel demands, price changes, raw material costs, and other issues in the steel and mining industry. Ternium is a Luxembourg company. They are listed on the New York Stock Exchange under the ticker TX. If you want to trade their stocks, you're buying their American Depository Shares or ADSs, which represent ordinary stocks and make it easier for Americans to trade. Ternium makes different kinds of steel stuff, semi-finished products like slabs, billets, and round bars, and finished things like coils, sheets, and tubular items. They also mine iron ore and sell electricity. Let's look at how they want to be competitive in this space. They focus on making fancy, high-priced products, aim to grow strategically, and want to run their operations really well. For example, a new plan is to add fancy technologies to a center in Mexico to make even better steel and replace imports. Also, there's talk about a new facility for steel slabs to further boost integration and take advantage of those attractive market opportunities. But it's not all about profits. Ternium has ESG goals, or environmental, social, and governance, and aims to improve communities, ensure labor safely, and reduce environment impacts. I wonder if they are making a real effort to do so. What could go wrong? A whole lot, actually. As with all reports, we should take a look at all the potential risks. If something goes wrong with the economy, the demand for steel could fall. Also, the prices for things like iron ore or energy might go up, hurting their profits. There's a risk they might have to write down the value of their assets, especially their goodwill, which is an accounting term for the intangible value of acquisitions. They are subject to labor disruptions in Mexico, potential security breaches, and climate-related events which have impacted them recently. Then there's the legal side, which could get messy with little notice. There's also a significant lawsuit about their acquisition of a stake in Usiminas that we should keep our eyes on. So let's scroll down and see what's up. Whoa, this is getting more dicey after losing the original case. So they have to pay CSN an indemnification or compensation due to their purchase of participations in Usiminas in January of 2012. I cannot pronounce all of this legal stuff, so let's make it simple. Ternium might have to pay CSN close to $500 million. Trade regulations and tariffs are also a key risk. Actions by the US like tariffs could affect their sales and revenues. And then more new tariffs and trade conflicts happen this year, including tariffs from Mexico, Canada, and China. With all these new tariffs going into effect and potential for retaliatory tariffs, we should definitely keep an eye on future results. They also are exposed to mining risks, including operational accidents, change in mine regulation, and new legislation. Let's take a look into some financial numbers from the filing. First of all, their sales are pretty flat. Total net sales only increased from $17.61 billion to $17.649 billion, but there are a few changes if we dig deeper. Most notably is that sales to customers in Brazil accounted for 24% of consolidated net sales of steel products during 2024, 13% during 2022. So their business in Brazil is booming. But as said earlier in the filing, in Argentina, steel demand has fallen. We might want to keep an eye on their South American operations for future performance. Gross profit fell from $3,559 million to $2,089 million. This seems consistent with the fact that steel demand is cyclical and can change quickly based on a whole host of external factors that are hard to forecast with accuracy. It doesn't seem to be caused by any bad actors from the Ternium executives. To counteract that point, however, they did start building a lot of new fancy facilities in Mexico, so the overall picture is not that bad. Speaking of money, what's the outlook on the company? With all these numbers out in the open, what do we do with them? Well, here's my take. Ternium faces significant headwinds, including legal disputes, tricky trade policies, and cost pressures. All this make its business unpredictable. I think the new Brazil facilities look promising in the long term, despite whatever current turbulence. But as with any company that has great reward, there is also a lot of risk. There is risk related to the ongoing legal dispute, as the damages could be very high. Then there is a risk with the crazy amount of tariffs and the trade conflicts. Also, if they cannot successfully implement their business strategies, all this good could go to nothing. Also, in general, it's important to ask what is happening to the world economy. Are we going to enter a new Cold War and see an increase in steel? Who knows? In conclusion, Ternium is not a terrible company and the numbers aren't awful, but there is better returns with far less risk out there. That's it for this deep dive into Ternium's filing. Thanks for tuning in. If you'd like this episode, be sure to hit that like button, drop your comments below and subscribe for more insightful analyses. See you next time.